Welcome back. We're watching Talk Money. Our mutual fund guest for today's Hemant Rustagi, CEO of Wiseinvest Advisors. First up, we have an email from Muskan Kalro, writes from Delhi, and she says she already invested about 3,000 in Franklin India Tax Shield. She wants to invest in another ELSS fund. Hemant, she asks you for a suggestion of what she should be investing in.
I think the Franklin India Tax Shield also has been one of the steady performers. So if she wants, she can add actually more amount to this. But if she is keen on having another fund in the portfolio, then she can consider Canada Robeco Equity Tax Saver. It's again one of the top performing fund, has been a consistent performer over the years. So I think she can divide this amount into these two funds.
And Muskan, that's the advice coming in for you. Next up, Varun Chawla calls in from Mumbai. Hi Varun, what's your question? Okay, I believe that's an email too. Varun invested about 1 lakh in UTI Services Industries Fund in 2009. He's a little concerned about the performance of this one and asked if he should continue to hold on to this one or exit.
I think the UTI Service Sector Fund, as the name suggests, is actually a sector fund which invests in the service companies associated with the service sector. The problem with the sector fund is that they tend to be very volatile and the performance can be quite erratic. I think that is what has happened with this fund. If you look at last 2-3 years, performance hasn't done very well. Maybe the performance has picked up in the last 6 months. But my suggestion would be that, for someone who is in the process of building up the equity fund portfolio, should not have sector funds in the beginning and also should not have in the large proportion. So my recommendation would be that he can switch this money into UTI Equity Opportunity Fund, which is a diversified fund, has been doing well. I think that will be better for him.
Next up, this is an email from Rashi Mehta, who writes in from Nasik. She invests 3,000 in Can Robeco in France, 3,000 in HDFC Mid-Cap Opportunities Fund. She's looking at doing an additional SIP of 4,000 rupees. Should she, Hemant, increase the exposure to existing holdings, or should she go out there and invest in another mutual fund?
Well, the two funds which are there in the portfolio, both are aggressive by nature. One is Can Robeco Infrastructure Fund, which is a thematic fund. Another one is HDFC Mid-Cap Opportunity, which is a very quality fund, but it invests in aggressive segment of the market, which is mid-cap. So in that case, I think she needs to create a balance in the portfolio. She should be looking at a fund which is primarily investing in large cap stock. Could be HDFC Top 200 or ICICI Focus Blue Chip. But I would say about the existing two funds, especially the Can Robeco Infrastructure, if these are the three funds in the portfolio, my recommendation is to move out of infrastructure fund, because being a thematic fund, again, it can be erratic, and switch that money into Can Robeco Equity Diversified Fund. So these three funds for 10,000 should be all right.
Hi, we've got an email now from Jitendra Bora, and he sends us an extensive list of funds that he invests in. He's 52 years old. He has about 2,000 rupees in HDFC Top 200, 1,000 in HDFC Equity, about 1,000 in IDFC Premier Equity Fund, and 1,000 in ICICI Focus Blue Chip, and 1,000 rupees in Birla Sun Life. All these funds, he's been making investments over the last 2 years. He's looking at about a 10-year time horizon. How does his portfolio look with that 10-year time horizon?
Well, I must say that his fund selection has been quite good, both in terms of, I would say, the quality of fund and also in terms of exposure to different market segments. But there are 5 funds where the money is being invested for 6,000 rupees SIP. I think there is a need to consolidate the portfolio. So a couple of recommendations which I have for Jitendra is, one is to stop SIP in Birla Frontline Fund and add that amount to ICICI Focus Blue Chip. And the second one is, because there is one multi-cap and one mid-cap fund, IDFC Premier Equity, he can stop in IDFC Premier Equity and add that amount to HDFC Equity. So for 6,000 at best, at maximum, he should have 2 or 3 funds. So these are 3 funds that he can continue. And if he continues this process for 10 years uninterruptedly, assuming an annualized return of around 12% here, he can build a portfolio of around 13 lakhs. That's the value he can expect to get.
Well, Jitendra, that's clearly good going. Hemant, giving your investment ideology a thumbs up. Well, that's also the time we have on this edition of Talk Money. The markets are not really managing to hold up. Flat now, pretty much given up those little gains that we've seen in early trade. 50 to 40 is what the Nifty is trading in at. The breadth is weak, sectorally speaking as well. There's not too much positive going on for the markets. Asia is looking brittle too, and it doesn't seem like there could be much of a pullback in the second half of trade either. Well, thanks for watching. There's a lot more programming lined up, so keep it with the channel.